So, you run a business, or maybe you're a really successful professional. You know that making a profit, that's only half the battle. The real challenge, the thing that separates a good year from, building actual lasting wealth, is figuring out what to do with that profit. Today, we're going to break down a powerful playbook for turning those hard-earned gains into a secure financial future. Let's dive in.
This is the question, isn't it? You've had a great quarter. You closed a huge deal, and that money is just sitting there in your account. And you have to decide, what is the smartest possible move right now? How do you make this money start working for you, creating wealth that's going to last way beyond the next business cycle? That's exactly what we are about to map out.
All right, here's our roadmap. First, we're going to start with the big picture strategy, the golden portfolio rules. Then we'll get really specific with a formula for putting money back into your own business. After that, we're turning all this theory into action with a super simple 4-week plan, and that leads us to the most important part of all, making your very first investment.
Okay, first things first, we have to build the foundation. And look, this is not about chasing the latest hot stock tip or some crypto fad. This is about building a resilient long-term portfolio that's designed for steady, reliable growth. So where should your investment money actually be going? Okay, check this out. This chart lays out the ideal balance. Now notice the biggest slice right there, a solid 30 to 40% is for real estate. We're going to get into why that's such a powerhouse in a second. Then you've got 20 to 30% in stocks. That's your growth engine. And it's followed by these smaller but super strategic slices, 10 to 15% in other businesses to diversify, and 5 to 10% in gold for stability. But look at what this whole thing is built on. A solid 6 to 12-month emergency reserve for both you and your business. That, my friends, is absolutely non-negotiable.
This quote, man, it just gets right to the heart of why real estate gets a top spot in this strategy. Think about it. Markets go up and down. Technologies come and go. But land, it's a finite, tangible asset. The whole point is that an investment in actual land is never really wasted because it has this inherent, enduring value that other assets just can't copy.
Now, this is a really critical distinction we need to make about real estate. There's a huge difference between zameen, which means physical land with a title that you can actually walk on, and a file, which is basically just a piece of paper, a promise that you'll get some land in a future development. The advice here is crystal clear. You invest in the tangible asset you can see and touch, not the paper promise. So let's quickly look at the other parts that round out this portfolio. That 20 to 30% in stocks? Well, that's the engine for growth and appreciation. Gold, at a pretty conservative 5 to 10%, isn't about getting rich quick. It's your insurance policy, your anchor of stability when things get volatile. And finally, putting 10 to 15% in other people's businesses, well, that's just a smart way to diversify your income so you're not 100% reliant on your own venture.
Okay, so we've covered where to invest your profits externally. But what about the engine that's creating those profits in the first place, your own business? Turns out, the strategy for reinvesting in yourself changes a lot, depending on how mature your company is.
And this is where the strategy gets really personal to your own business journey. See, in those early scrappy years, stage 1, you are in pure growth mode. A huge 60% of your profits go right back into the business, with only about 10% being invested externally. And what about you? Well, that's what your salary is for. Then you hit stage 2, that sweet spot between 3 and 7 years. You can ease up on the gas a little bit. Reinvestment drops to a balanced 40%. You match that with 40% invested outside the business, and this is the good part, you finally get to take a 20% owner's bonus. By stage 3, your business is a mature, cash-flowing engine. The focus flips completely. Only 20% needs to go back in, which frees up a massive 50% for your external investments and a 30% cut for you, so you can truly enjoy the fruits of your labor.
Strategy is great, but execution is everything, right? Knowing these formulas is one thing. Actually putting them into practice is a whole different ballgame. So let's break this down into a simple, actionable plan you can literally start this month.
It is this straightforward. Week 1, just calculate. That's it. Look at your last 3 months, find your average profit. Done. Week 2, determine your personal monthly salary from the business. And seriously, if you're not taking one, you need to start now. Week 3 is a total game changer. You open separate investment accounts, one for the business, one for you personally. This creates so much clarity, it's incredible. And finally, week 4 is for action. You make that very first investment, and it doesn't matter how small it is.
And that brings us to the final and honestly the most vital step. All the planning, all the spreadsheets in the world, they mean absolutely nothing without this one action. Overcoming that initial inertia and just making the first move is what sets the entire wealth-building machine in motion. So many people freeze up right here because they think they need this huge pile of cash to start investing. This number is here to just shatter that myth. Your first investment, whether it's from your personal account or the company's profit, can be as small as 10,000 rupees. That's roughly 120 US dollars. The exact amount is not the point, the principle is. Buy one share of stock. Do anything. The act of starting is what matters. So at the end of the day, the takeaway here is really simple. Don't wait for the perfect moment or the perfect amount of money. The goal is not to be perfect. The goal is to start. Separate the money, make that first small investment, and just start building the habit. Once that system is in place, you just keep feeding it. Your company's investments will grow, and your personal investments will grow right there alongside them. So there you have it. You now have the playbook from the big picture asset allocation all the way down to the first practical step you can take this week. You see, the journey from just making a profit to building real wealth doesn't have to be some big mystery. It's just a series of deliberate, consistent actions. So the only question left is, what's your first step going to be?